Hello guys. Amid growing US-China trade disputes, hope for a deal emerges, potentially boosting Chinese EV stocks like NIO in global markets. Tensions between the United States and China continue to make headlines, and one of the more recent developments has added a surprising twist to the ongoing narrative. Former President Donald Trump has publicly expressed optimism, suggesting that the US and China may soon reach a mutually beneficial trade agreement. While that may sound promising on the surface, it follows a wave of aggressive tariff hikes, particularly the US imposing a staggering 245% tariff on certain Chinese exports, including key components like semiconductors and other tech-related goods. This move has had significant ripple effects, especially for companies like NIO, which, while not directly targeted, are still feeling the pressure due to broader investor uncertainty and supply chain disruptions. The impact of these tariffs is not just a theoretical concern. It's already affecting real-world business decisions and stock market sentiment. In particular, US-listed Chinese companies, especially in the EV sector, have experienced noticeable stagnation or decline in their share prices. The mood among investors has turned cautious, with many waiting for more clarity on where this trade standoff is headed before making bold moves. Much of this hesitation boils down to unpredictability. Market participants simply don't know what the next step will be, whether it's another wave of tariffs or a diplomatic breakthrough. Both countries seem to be playing a high-stakes game, and while each claims to have the upper hand, the collateral damage is evident across multiple industries. For NIO and other Chinese EV makers, the uncertainty is particularly frustrating, given the enormous growth potential they have globally, especially in North American and European markets. Now, adding another layer of complexity to this already tense situation is the warning issued by JPMorgan Chase CEO Jamie Dimon. He has publicly stated that escalating this trade conflict could backfire severely on the US economy itself. According to Dimon, the idea of launching a full-scale economic confrontation with China might seem like a show of strength, but it could lead to long-term damage that outweighs any short-term political gain. The CEO's comments were clearly aimed at encouraging policymakers to reconsider the path they're on. There's an underlying reality here that's hard to ignore. While the US may wish to use tariffs as a punitive tool against China, it's also exposing itself to unintended economic harm. Dimon's point was essentially that the US has just as much, if not more, to lose if this trade war continues to escalate. So, in the grand scheme of things, a balanced, negotiated solution would benefit both nations far more than continued antagonism. Interestingly, some reports suggest that the Trump administration may be considering leveraging support from other countries that were previously hit with tariffs. The idea would be to form a kind of economic coalition to pressure China even further. However, that strategy raises a number of questions. Will those countries actually side with the US in a coordinated effort to isolate China economically? That's far from guaranteed. It's important to remember that China plays a massive role in the global economy. Many nations have built strong economic ties with Beijing over the years, benefiting immensely from trade and investment flows. Even if a few countries do align with US interests, it's highly unlikely that a majority of them would be willing to jeopardize their own economic relationships with China. And when you consider that China is no longer known for producing cheap, low-quality goods, but rather high-tech, high-quality products, it becomes even harder to convince the global community to isolate such a key player. Take NIO, for example. This company is a shining example of how far Chinese manufacturing and innovation have come. Their vehicles and technology platforms are not only competitive, they're world-class. NIO is delivering cars that rival, and in some cases surpass, the quality of offerings from American and European automakers. So when we talk about China's evolving reputation, companies like NIO are at the forefront of that transformation. China's recent advancements in AI, particularly platforms like DeepSeek, are also worth noting. These are clear indicators that the country is not only keeping pace with Western innovation, but is actually setting new benchmarks in some areas. As a result, the old narrative that cast China as merely a copycat economy no longer holds water. The country is producing top-tier products that appeal to both domestic and international consumers, including in premium segments like electric vehicles. Even Russian President Vladimir Putin recently weighed in on this topic, noting that if the U.S. chooses to shut itself off from fair competition with nations like China, it risks falling behind in innovation and competitiveness. His remarks emphasized a crucial point: healthy competition drives growth and development. Trying to stifle that competition through tariffs or trade barriers may end up doing more harm than good in the long run. This brings us back to Jamie Dimon's warning. He isn't alone in sounding the alarm. More and more voices in the financial world are cautioning that isolating China could backfire dramatically. For EV investors, this message should be taken seriously. If relations continue to sour, the ripple effects could slow innovation, disrupt supply chains, and reduce market access, all of which would weigh heavily on share prices and long-term growth prospects. That's why the hope of a new trade deal, as Trump suggested, is so significant. If an agreement does come to pass, it could act as a major catalyst for Chinese equities, particularly in sectors like electric vehicles, where companies like NIO are ready to scale. In that case, we could see a strong rebound in NIO's stock and other related assets. The sense of relief alone would likely trigger a surge in buying activity from institutional and retail investors alike. Of course, questions remain. Who will initiate the next round of negotiations? Will the U.S. continue to act from a position of dominance, or will both parties approach the table with mutual respect? That dynamic will be key. China has made it clear that while it's open to dialogue, it expects equal footing in any discussions. If that balance can be achieved, there's a real chance for meaningful progress. On a related note, Trump has also hinted at the possibility of securing a strong trade agreement with the European Union. This comes at a time when tensions are also running high between China and the EU, particularly concerning Chinese EV exports to Europe. Tariffs of up to 45% have been imposed by the EU on Chinese electric vehicles, and NIO, again, has felt the sting. In late 2024, the company was hit with an additional 20.8% tariff, further complicating its efforts to expand in Europe. However, there are encouraging signs that talks between China and the EU are moving in a more positive direction. Behind the scenes, both parties are reportedly working to eliminate these tariffs altogether. If successful, this could unlock tremendous opportunities for NIO and other Chinese EV makers to gain traction in European markets. It would allow for more aggressive expansion strategies, improved sales volumes, and ultimately, a more robust global presence. While the China-EU discussions seem to be progressing, the real obstacle remains the relationship between Washington and Beijing. If those two giants can find common ground, the resulting market optimism could lift the entire sector. It's not just about NIO, it's about the whole ecosystem of clean energy, global trade, and technological advancement. So, in summary, there's a lot happening on the geopolitical front, and all of it has massive implications for companies like NIO. From trade tariffs to diplomatic negotiations, the stakes are incredibly high. But with the possibility of new agreements on the horizon, there's also room for optimism. Investors are watching closely, and if things turn in the right direction, the next few months could bring a major turning point for Chinese EV makers in global markets. Let me know what you think. Are we finally seeing the light at the end of the tunnel? Could this be the turning point that NIO and other Chinese companies have been waiting for? Drop your thoughts below, because one thing's for sure: the next chapter in this saga is going to be very interesting. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.